Visa account teachings. Today we are going to discuss comprehensive question on admission of a partner. Here we have capital adjustments. In capital adjustment it is given excess or deficit to be adjusted through partner's current accounts. What do you mean by that? If any partner has any excess to be transferred to his current account. If any partner has any deficiency, that deficiency is to be charged from his current accounts. By Ramesh Kumar, my mobile number is 61435205206 and my mail ID is kumar.ramesh5759@yahoo.com. If you have any doubt or any clarification you want, you can give me a call at this number or you can send me the mail also at kumar.ramesh5759@yahoo.com. Now here we are having a question. A and B are partners in a firm. On 1st April 2013, they admitted C. The balance sheet of A and B as on 31st March 2013 was as follows. You are given the balance sheet of A and B on the date of admission of C. Now on liability side, provision for doubtful debts 40,000. Either the company can show as its liability as it is here, or it can show on the asset side sundry debtors 8 lakh, less provision for doubtful debts 40,000, in amount column 7,60,000. Either method can be applied. Workman Compensation Fund. What is Workman Compensation Fund? This is a fund kept for the workers. If any worker during his service he meets any accident or he is sick for a long time or he has some other contingency, in that case amount is to be paid through this fund. Creditors 3 lakh, capitals accounts A 5 lakh, B 6 lakh. On the asset side, cash is 1 lakh, debtors 8 lakh, stock 2 lakh, machinery 3,86,000 and profit and loss 40,000. This is previous year's loss, which we are showing in the balance sheet on asset side. On admission of C, this loss will be transferred to all partners in their own profit sharing ratio. That is A's capital account debit 20,000, B's capital account debit 20,000 to P and L 40,000. Narration would be profit and loss already appearing in the balance sheet is charged to partner's capital account. C was admitted in the firm in the following terms. C brings rupees 4 lakh as his capital, but he was unable to bring any amount for goodwill. C can bring rupees 4 lakh as capital, but he cannot pay anything for goodwill. What would be the entry when C brings capital? Cash account debit to C's capital 4 lakh. Then new profit sharing ratio between A, B, C will be 3 lakh, 3%, 3 is to 2 is to 1%. Claim on account of workman compensation 30,000. We have provided for workman compensation 56,000, but actual claim has been 30,000. It means it has a gain of rupees 26,000. That is what would be the entry. It has decreased from 56,000 to 30,000. By how much it has decreased? 26,000. The workman compensation fund account debit 56,000 to revaluation 26,000. Then he says creditors were paid rupees 20,000 more. In this case, creditors are paid 20,000 more. Already creditors are 3 lakh. 20,000 more mean we have a loss of 20,000. And real creditors in the new balance sheet would be shown 3,20,000. What would be the entry? Revaluation account debit to creditors 20,000. Then outstanding expenses be brought down to 12,000. On liability side, outstanding expenses are 30,000. It is to be brought down to 12,000. It means it has decreased by 13,000. When a liability is decreased, outstanding expenses account debit to revaluation. With how much? 18,000. Goodwill of the firm was rupees 1,80,000. Since he cannot pay share of goodwill, so therefore goodwill account will be raised. What will be the entry for goodwill? Goodwill account debit 1,80,000 to A's capital to B's capital. Since old ratio is not given, it means they are sharing profit and losses, A and B are sharing profit and losses equally. So goodwill account debit 1,80,000 to A's capital 90,000 to B's capital 90,000. Now on the asset side, sundry debtors we have discussed, stock, machinery is the same. We are finding profit and loss account 40,000. This is the old profit which is appearing in the balance sheet. So what would be the entry for this? A's capital account debit 20,000, B's capital account debit 20,000 to profit and loss 40,000. That is whatever is appearing in the balance sheet. You are asked prepare revaluation account. You give journal entries, revaluation account, capital accounts of the partners and the opening balance sheet of the new firm. Now he says that capital accounts of all the partners are to be adjusted in their profit sharing ratio. Excess or deficit be transferred to partners' current accounts. Now we are to find out the total capital. C has come for 1/6 share, 3 plus 2 plus 1. And he has paid rupees 4 lakh as his capital. For 1/4 it is 1/6 it is 4 lakh. The total capital should be 4 lakh into 6 upon 1, 12, that is 24 lakh. Now what should be A's capital? 24 lakh into 3/6. So 24 lakh into 3/6. 3/6 is 1/2. It comes 12 lakh. B 24 lakh into 2/6, 1/3, 8 lakh. And C is already having 4 lakh. Now what he says, capital of all the partners to be adjusted in profit sharing ratio, excess or deficit to be transferred to current accounts. After adjustment, if there is any excess or deficit, that will be adjusted through current account. Give the journal entries, prepare revaluation account, partners capital account and the balance sheet. Now we are coming to the next. We are having important points of given practical question on adjustment of capital account. Excess should be transferred to current accounts and deficit should be transferred from current accounts. Now working note here, what we find, Workman Compensation Fund. What is Workman Compensation Fund? This fund is created to compensate a worker in case of any contingency like accident, long sickness or natural calamity. In this question, actual claim is less than the given claim. Thus, liabilities has decreased. Second is provision for bad debts. The provision for bad debts can either be shown on the liability side of asset side. Liability side or on asset side. We can show provision for bad debts either on liability side or on asset side by subtracting from sundry debtors. Bad debts are same as provision for bad debts. Whatever is adjustment is given, it is same as 40,000, which is covered by the provision for doubtful debts. Thus, it will not affect revaluation account. Thus, debtors will be shown as 7,60,000 net. Now, creditors are paid 20,000 more. Thus, real creditors were 3,20,000. Now it is 3 lakh. If you prepare revaluation account, here we will get revaluation profit of 4,000, which will be transferred to A and B in their profit sharing ratio. Revaluation account debit 4,000 to A's capital, 4,000 to B's capital, 4,000. Now what he says, capital accounts adjustment. For 1/6 share it is 4 lakh, total capital should be 8 lakh. Then we are having capital adjustments. For 1/6 share, C is paying capital rupees 4 lakh. Total capital would be 24 lakh into 6 upon 1, sorry, 4 lakh into 6 upon 1 is equal to 24 lakh. A's capital would be 24 lakh into 3 by 6, 12 lakh. B's capital would be 24 lakh into 2 upon 6, 8 lakh. Therefore, the balance capital of C is this one. If you like this video, kindly like, share and subscribe it. Thank you very much. In partners capital account, we have a buy balance PD A 5 lakh, B 6 lakh. Buy cash, C is bringing 4 lakh. Revaluation profit is 4,000. Buy revaluation for 2,000, 2,000. Goodwill is to be raised by 1,80,000. Buy goodwill 90,000, 90,000. On the debit side, to P&L 20,000, 20,000. Now to balance CD, A 12 lakh, B 8 lakh, C 4 lakh. Total 12 lakh 20,000, 8 lakh 20,000, C 4 lakh. Now on credit side, buy balance BD 5 lakh, 6 lakh. Buy cash brought by C 4 lakh. Buy revaluation 2,000, 2,000. Buy goodwill 90,000, 90,000. Buy current accounts. Debit side is more. By putting on credit side, buy current account A 6,28,000, B 1,28,000. Then we are going